All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and today is not Tuesday, although I want to say that it's Tuesday because it's the second day of the trading week. But we had Monday off, so today is Wednesday the 6th. All right. Well, today's price action, kind of more of the same of what we've been seeing in September so far, and let me say the obvious first. We know that it's a weak seasonal month, and I think this is my first video, public video for end of day video so far in September. But we've talked about this obviously several times. You've probably heard this several times. But yes, September is one of the most seasonally weaker months. So it's one of those things that here was my notes for the weekend for members. The bottom line, we go through a bunch of different factors, and then I put together the bottom line is September is a weak seasonal month, and it's mostly the second part of the month. That's where the seasonality really kicks in. But being disciplined in this market, rates in the dollar continue to be must watches, and and as well as looking at what sector views are doing. Crude got into the 2023 value area. That's something that we've been talking about, for weeks. That was on the verge of doing, and that was a must watch. I mentioned again, this is from Sunday, and I've already trimmed my energy exposure. But I mentioned base hits. This is really base hits, maybe even like bunting to get to first base, walking, taking pictures, whatever you could do to get to first base. That's what this month is all about. So I just wanted to start with that because I think that's the most important thing. And I'm going to go over a couple things. So as I had talked about, I mentioned that interest rates and the dollar are must watches. So if we look at one of where we are right now, we saw in the back end of August, we saw this nice rally in bonds, but it was a counter trend rally, and we stopped right at the 20-day moving average. And then we started a really kind of right back on the first day of the month, yields started to go higher. Keep in mind, I'm looking at bond prices, which is inverse to what yields are doing, but it's just for me easier to look at when we have a value area associated with it. And that's where we are with interest rates, and we did not stop. I was one of the scenarios that I outlined towards the end of last week is that maybe we did move back. I didn't think it would be this quickly, but I thought that maybe we would get down to the bottom of value and hold it in here. So far, we're not able to do that. And you can look at TLT. This is ZB. This is 30-year bond futures. TLT is a different maturity, but that is also broken through the value area like no problem. So this tells you right now. And I put out a couple charts over the weekend about credit spreads and that type of thing. Everybody seems to want to know what's going to cause yields to stop going higher, right? And it's going to be a couple things, but one of which is you have to wait for buyers to come in. It's just like anything, right? Because I think that was such a big popular trade. I've heard a lot about, speculators have this big short position, but every note that I've read, well, I don't want to say every note, but I've read so many notes from brokers saying the trade this year was to go long bonds. So that to me was the popular trade. And sometimes when these popular trades, everybody looking for a bottom, you basically just have to wait and be patient. It's basically when buyers think it's a good opportunity, right? And again, people love predictions, but it's better just to watch and have a level to trade against. And that's just in any trade. There's tons of other macro forces. I'm not going to get into those in this particular video, but here's where this stands for rates, right? I had somebody just ask me, well, what do you think if interest rates get to 10%? Well, they're already there. Sorry, 5%. 10% would be something else, but they're already there for the 2-year. Right. And the 3 years at 4.74. So yes, this could come up to match this. Is that going to be good? My thoughts are, is that going to be good for equities? If we take out the lows and start to, take out these lows as well? No, it's not going to be good for equities. And you've got to be patient and be disciplined and not get overexposed. So that's where we are. First things first, now that we've broken the value area for the month, I would watch those lows where we reached towards the end of August, right? And then the other factor, right, that I said to watch, right, is what the dollar is doing. right? And it's not so much about like, what the dollar is doing for the day, which it was only, basically just a little bit more up than flat. But I mean, that's a big change to see this break out to, new whatever 6 months highs or 9 month highs. This is, so that's a big level, and I think that this is the cause of why you're seeing such a choppy market. I would also add that I think equities are holding up pretty good here, considering these headwinds. I think things could be much worse right now, considering that you have the dollar at I guess it's 9 months highs, or even more than that, I guess, because here's where we were in January. But I would continue to really watch your risk and pay attention, because these are not good looking charts. And again, I view both rates going higher, especially when they move quicker, which is what they've done so far this month, right? That move this month has been fast, right? And when the dollar moves faster too, and the level is higher, right? That's not a good scenario. So let's talk about equities, right? All that talk about some of the boring things, right? But these are what the drivers are of this market, right? I could go over some other charts, but we can't shake the fact that usually higher interest rates and a higher dollar are not good for equities. So what are we seeing so far this month? Well, remember, in the beginning of, this is what I tweeted out over the weekend, or very close to it. And I don't have the update for this, but this is a nice gauge of breadth, right? And we actually had this flip back over. But, given how bad breadth is, breadth was pretty negative today, this might flip back over, right? And again, what does that tell you? If this line starts to break back below the 10-day moving average, right? It tells you that you're in a much more difficult environment, right? You can't trade out of that, right? You have to understand, you have to be a risk manager and basically say, hey, if breadth flips back to the downside, it's been pretty nasty so far, it just hasn't really, again, this isn't updated for today, so I don't know if it has, but you don't want to fight the trend, right? And when breadth is moving like this, you just want to be aware. Now, so overall, like, I think the market is hanging in there pretty well, even though, so what do we know with this chart with the S&P? Right. Well, we're above the August lows. We made this kind of like double bottom, higher low, right? And now, it could be that we come in and test 44.17, right? And then we'll have to see what happens there, right? For now, we're holding this 1 hour bottom of value. So I'll give you some levels here. S&P futures 44.63 is the level to watch. We did break that intraday, but we held on to it. So I would be mindful of that 44.63. If we break that, I would watch out, because I think the next level down is basically down at 44.18 to watch. Also, another observation from this is, even though the indices didn't finish on the lows today, this is a position of weakness, right? Why is it a position of weakness? Because we're back below the 50-day moving average. We're back below the 5-period moving average. We're back below the 20-day moving average, right? That's a place to be a bit more defensive. So how do you cope with that being more defensive, right? So sometimes I say that in these videos, but I don't really give you, sometimes I believe that everybody, understands what I'm saying. It means holding less positions, and it means holding smaller positions, right? If you're going to continue, I'm a swing trader. So if you're going to continue to hold swing trades, lighten up on the size, right? So that you don't get caught in some of this volatility that we're seeing in the market. So even though the VIX, right, talk a little bit about this, right, not the most, aggressive move higher in the VIX. So, I mean, that's one thing that just kind of tells me to be patient, right? We're not seeing anywhere near where the level was in the middle of August in terms of volatility. And this is quite a subdued level, 1445, right? So again, all the VIX tells you, right? People like to look at the technicals and so forth. I mean, all that I basically look at when I look at the VIX is whether it closed on the highs and what the overall level of It is, because remember what the VIX measures. People get lost in some of this, but it just measures 30 days implied volatility in S&P SPX options, right? That's all that it measures, guys. So don't get caught up in like, oh my God, it didn't get over this level. I saw somebody today posting, oh geez, well, it got rejected at this level. That's garbage. You can't really, the technicals trying to come up with like a technical observation and say I'm going to do this because the VIX didn't. I don't think like that's a very good strategy. Again, I'll give you this is all my opinions, and of course in this video, but I don't think like that's a very good strategy to say, oh my God, it got rejected at the 15 level or whatever level. I think you've got to trade what's in front of you, which is price, right? And understand the level of volatility, not necessarily trying to come up with technicals, right? To say that this is important or not. All right, so let me move on. Sometimes I get sidetracked, but so far, a couple of things that I mentioned. We're this is very indecisive, right? If we can hold here and maybe build out some type of a curve in here, right, after this like W pattern, I think that would be very positive. So but even if we come down to 44.17, as long as we hold it, I think that would be constructive. Let's look at the Qs here for a minute. Look at where the Qs closed today, right? So this is different than the S&P because this started, you go back to the S&P, which started the month inside the value area and got rejected at the top of value. The Qs actually started the month above the value area, so some relative strength. But overall, it's very close. 375.30. We closed below that. The Qs closed below that level, but we're splitting hairs there. So I think keep in mind that the top of value and see what price can do right around that level. It's also below the 5-period moving average, which again is a little bit of caution in the short term, but it's still above the 50 and the 20. So constructive, right? Considering that and considering the move in oil, it's a very odd market right now when you consider like what's been happening in crude, right? With this move higher here. This is something, if you're a regular viewer of my videos, you've known that I've talked about this 84.67 level, right? So with energy outperforming like this, it's very interesting to see, for example, when we take apart what the Qs are doing, looking at what software names are doing, for example, software is outperforming a bit. This was a chart that I put up a bit earlier. Right, and this is if you look at this is I think a 3-year chart that we're looking at here, an IGV and the Qs, right? So software is in the numerator, Qs in the denominator. This is just good to look at the relationship, right? So basically a lot of sideways movement, and of course if you zoom in and just look at the last month, right, you could see that software names have really been outperforming over the last month. But I mean, can they break out of this base? I posed this question to some traders earlier today, and I said, would you, with that, and I was covering up the symbols, I said, would you buy this chart? I particularly would, because you've got price, you've got this long base going on, and price getting above these moving averages. So I think this is constructive, even though I think, personally, the software space is kind of overcrowded, especially when you look at, there's so many of these small software names, and I'll give you an example of a couple, right? This is one that we've been seeing a lot of call activity. I actually own this. Do I own a big position in this? No, I don't own a big position in this. You could see right here, if we go to a trades channel, right, you could see I put on basically like, I did not put on a huge position in this, and I'm already taking like targets in this. Why am I taking such short targets, by the way? Like, only 50-cent targets, because that's the market that we're in right now. This is a base hit type, type market. So they do have their investor day tomorrow. That's at 11:30. You always have to think about investor days and events as buy the rumor, sell the news. I don't know if that's for sure that what's going to play out tomorrow, but I will have already locked in some profits. Maybe I'll own like the last third of the trade going into investor day, but there's a lot of times when that's the case. right? That expression and relationship happens over and over on Wall Street: buy the rumor, sell the news. A couple other names that I thought were kind of interesting for the day. Oracle, this is a name that I've been in. I got involved in it yesterday. I actually took it off when the market really went lower today, but I re-added it. It's doing okay. Reminder that this name reports earnings next week. And, and then there's a bunch of other names to kind of watch at this point, right? VRT is one that, we're starting to see, and this is where a pullback is not the worst thing in the world, right? And I think you get used to that as a trader, because look at some of the names that have just run a little bit too far. This is one of them. Let this name, I'm waiting for this name to kind of come down a little bit. We're starting to see a little bit of selling pressure, right? You could see the volume kind of pick up a little bit. Let it come back in a little bit. Look at Splunk. Still, I can't get there. This is sometimes what names do. They trap you out of names, because Splunk has like 10 green bars in a row. I wanted to get in this name, but it's just not giving the opportunity yet to go ahead and do that, right? Another hot name from last week, trying to coming in just a little bit, right? Which is AAPL, right? Look at this, into the top of value. Now, again, that's such a small amount in here, but maybe that's all that this name pulls back. I'm watching 42.26 tomorrow. Another name that did really well even when the market was weak a couple weeks back is starting to come in just a little bit, and that's Fastly. I would like to see this thing, maybe the 20-day moving average kind of catch up here. So these are some of the opportunities that await, if you could be patient, because I think some of these names have to come in a little bit, specifically Splunk, which hasn't come in at all. Right. And there was another name that I was going to go over too. Oh, just to kind of talk about some of the names that got a lot of attention today. Look at this Tesla, right? And I was in Tesla yesterday. Why did I get rid of it? I sold it right at the end of the day yesterday, because this market, let me repeat it again, right? You have to be careful in this market. This name traded all the way down to 244. By the way, where did it trade down to? Right to the bottom of value for the week. So there's a nice level to trade off of. I did mention a trade idea as this thing got to 245. Right. And I mentioned a 250, 260 call spread for about 250. I think that traded up to about $4 today. All right. Another name, Apple. Right. I would watch what it does. It did break through the value area for the week. Watch what it does at this 200 period moving average. Right. I'm not in Apple, not really looking at it. There's so many names, of course, like the big names, right? The Google, the Meta, Apple did not have a great earnings reaction. So this one I kind of put on the back burner, even though it had a really nice recovery. But I'm looking more at, I'm still long Google, right? And I'm thinking about adding to it in here. But Google and Meta, they had the strong earnings. This one just didn't jump off the page to me, so I didn't do anything with it today. But I think there's going to be a lot of opportunities, provided that you don't get caught up in what the market is doing right now and being patient. All right, guys, that is it for today's video. Have a great night. See you tomorrow.